The landscape of crypto has officially shifted, and this time, the change came from the top. For the first time in history, a sitting U.S. president has signed a crypto-related bill into law. Donald Trump just repealed the controversial DeFi broker rule, and the implications of that move are going to ripple, no pun intended, through every corner of the digital asset world. But that's not all. Almost in parallel, the SEC quietly released a comprehensive framework aimed at finally bringing clarity to the crypto space. For those of you who followed the XRP journey over the years, this isn't just big news. This is a vindication. So stick around, because what's happening now could be the foundation of the next bull run. A reset of regulatory expectations and a signal to institutions that the coast is finally clearing. If you've been watching from the sidelines, now is the time to pay attention, because everything is accelerating faster than people realize. Let's start with the repeal of the DeFi broker rule. On paper, it sounds simple. Repeal a policy and move on. But this wasn't just any rule. This was a policy introduced during the final stretch of the previous administration, designed to stretch the definition of a broker so wide that it would include DeFi protocols, wallet interfaces, and basically any crypto platform that facilitated token swaps. If it had gone through, apps like MetaMask, Phantom, and Uniswap's front end would have been required to collect your personal information, social security numbers, addresses, transaction histories, all of it. Even though these platforms don't hold your funds or manage your accounts like traditional brokerages, they were being treated the same. That would have been disastrous, not just for privacy, but for innovation. It would have forced DeFi into a centralized mold, stifled new projects before they had a chance to launch, and buried developers under paperwork that even traditional financial institutions struggle with. And to top it all off, the IRS wouldn't have had the resources to handle the tsunami of data they were demanding. Now, with Trump's repeal, that weight has been lifted. The message is clear. DeFi can remain decentralized, and innovation doesn't need to bow down to outdated definitions and red tape. This isn't just a win for crypto enthusiasts. It's a signal to entrepreneurs and developers that the United States might finally be ready to lead in blockchain innovation instead of lagging behind. But while that news was making headlines, something arguably even more important was happening in the background. The SEC, after years of ambiguity and what many have called regulation by enforcement, has released a document outlining how existing securities laws apply to crypto assets. It's not new legislation, but it is the closest thing we've had to an official rulebook, and that matters, because for years companies like Ripple have been fighting for clarity. XRP has been at the center of that storm, with Ripple's legal battle representing a much larger fight, the fight for definitional transparency. What counts as a security? What doesn't? Who decides? And based on what criteria? The SEC's new framework finally answers some of those questions. It states clearly that crypto assets not considered securities do not require registration. It explains how issuers can comply with existing disclosure requirements. And it sets a tone, one of structure, not intimidation. This is a huge development. For XRP, it reinforces the core argument Ripple has made from day one, that XRP is a currency, not a security, and should be treated as such. And while Ripple's legal journey isn't over, this shift from the SEC could influence not just that case, but how future projects launch and operate in the US. But what does this all mean for the market? Well, for starters, institutions that have been hesitant to touch crypto because of regulatory fog may finally feel like there's a path forward. Hedge funds, pension managers, and legacy banks, the ones with real capital, have always been interested in blockchain. Their issue wasn't the tech, it was the lack of legal guardrails. Now that those are starting to form, we can expect interest to ramp up. Already, we're seeing early signs. The state of New York, known for its stringent financial oversight, is reviewing legislation that would allow crypto payments for state-level agencies. That kind of top-down integration would have been unthinkable just 2 years ago, and it shows that the narrative around crypto is shifting, from speculative asset to financial infrastructure. But while all of this is happening, something strange is going on in the markets. Bitcoin, Ethereum, XRP, they've all been consolidating, even as the headlines turn more bullish. And yet, gold just quietly hit a new all-time high, surpassing $3,200. If you followed past cycles, this isn't unusual. In fact, it's a pattern. In 2020, gold surged in the summer, peaked in August, and shortly after, Bitcoin began its explosive move to $60,000. In 2021, a similar setup played out. Gold showed strength first, crypto followed, and now, here we are again. Gold is running, crypto is hesitating, and if history is any indicator, the fuse is already lit. Another key variable, global liquidity. Money supply around the world is increasing again. After months of tightening, central banks are slowly turning dovish. Inflation is cooling, and with US rates sitting at elevated levels, the Fed is under increasing pressure to begin cutting. That means capital is about to get cheaper. And when that happens, risk-on assets like crypto tend to rally. What's more, if we look at historical timing, We're approaching the magic number, 1,246 days. That's the average length between bull market peaks in previous cycles, from the top of the 2017 run to the 2021 peak, and from 2021 to now, we're sitting right at that inflection point. Based on that, we could be looking at a final surge between October and November of this year. And we're currently in the calm before that storm. So here's the big question. Why hasn't the market moved yet? Why, with all this bullish momentum, legal clarity, legislative support, institutional interest, are prices still stuck? The answer is simple. Lag. There's always a delay between fundamental changes and market reactions. The smart money accumulates during uncertainty. The price explosion comes after the groundwork is laid. And that's where we are right now. Laying the groundwork. Think about this. Ripple is ramping up global advertising. Ethereum is preparing for major updates. Bitcoin is holding strong under resistance. Altcoins are quietly forming bases. And the broader world, it's getting more curious. Streaming platforms are releasing documentaries on Ethereum's origins. Politicians are openly discussing blockchain in debates. Financial firms are hiring crypto strategists. It's all building, even if the charts don't show it yet. But the breakout will come. And when it does, people will call it sudden. They'll say it came out of nowhere. But you'll know the truth. It's been brewing for months. That's why right now, this exact moment, is the time to pay attention. Because by the time the masses get excited, the easy gains will be gone. The opportunities will have already passed. So, let's zoom out and recap what matters most. A sitting US president has just repealed a regulation that threatened the very nature of decentralized finance. That alone is historic. It marks the first real political recognition of crypto as more than just speculation, as something worth protecting and building around. The SEC, after years of confusion, is finally offering guidance. And whether you love or hate the agency, the fact that they're speaking in clearer terms is progress, especially when it confirms what XRP holders have said all along, that clarity was always possible and the delay was never justified. Institutional money is circling. States are experimenting with crypto payments. Global liquidity is returning. Historical cycles are lining up. And gold, the original inflation hedge, is signaling that risk appetite is about to return. And maybe most importantly, for the first time in a long time, it feels like crypto is playing offense again, not just defense. There's still uncertainty. There always will be. But the fog is lifting. The pieces are moving into place. And whether you're holding Bitcoin, XRP, Ethereum, or some obscure altcoin no one's heard of yet, this is your window. Because when the next breakout begins, it's not going to wait for you to get comfortable. It's going to reward those who were paying attention when things were quiet. So if you're still here, still watching, still learning, you're already ahead of the curve. And that's where the winners always are. Not chasing the noise, but reading the signals before they turn into headlines. What comes next is going to surprise a lot of people. Make sure you're not one of them. If you found this breakdown valuable, make sure to smash that like button and follow for more. We've got a lot more coming, and you won't want to miss what's next.